And in the U.S., stock index futures pointed to a higher open this morning after Treasury Secretary Stephen Mnuchin said the White House could unveil a tax plan very soon. The Dow Jones Industrial Average rose 0.85%, while the S&P 500 climbed 0.76%, and the Nasdaq closed at a record high at 0.92%. Investors will be keeping an eye on earnings and watching developments in Europe, where the first round of the French presidential elections will take place on Sunday. And on the earnings front, General Electric, SunTrust and Steve Madden are among companies who are set to report before the bell, while Morningstar is set to report after the bell. Now, business correspondent Jill Malandrino joins us live from the VOA studios in the U.S. to interpret those numbers coming from the stock exchange. Hello, Jill. Talk to us.
Hi. Hi, good morning. So we saw a pretty impressive rally on Thursday. We rallied throughout most of the trading session, closing near the best levels of the day in a broad sector rally. Financials resumed strength on earnings with the American Express beat, and also as yields inched further off recent 5-month lows. Tech has been a total standout despite IBM and Netflix falling in recent days on earnings. But the Nasdaq comp, as you mentioned before, traded higher by more than 1%, moving within 11 points from its record closing highs on April 5th, and that was at 59.36. We saw a lot of strength in semiconductors like with LRCX and Micron and microchip stocks like that. Transports jumped behind strong CSX earnings. Steel stocks like AKS also jumped on better earnings. And Trump administration also was looking to probe into steel imports. We saw strength in retail and discretionary as they outperformed with gains in apparel and footwear with a strong Foot Locker beat. Industrials and materials were higher, of course, ahead of GE and Honeywell earnings. And the Trump trade seems to be back in vogue given the positive stances taken by Treasury Secretary Mnuchin on infrastructure and tax reform policy.
But, Jill, relatively speaking, the Dow and larger cap names appear to be underperforming. Why is that?
Well, even though they were green yesterday, you're right, they have been underperforming relative to the Nasdaq and the Russell 2000. We saw some weakness in Dow components, Verizon and Traveler shares after quarterly results missed. This week, we also saw weakness in IBM, Goldman Sachs, and Johnson & Johnson. It's interesting to see how legacy businesses are underperforming relative to the broader market. Now, Goldman Sachs in particular was overwhelmingly disappointing in the key trading revenue segment, especially since peer banks like Morgan Stanley, Bank of America blew away those trade revenue numbers. There's also some weakness in bonds and gold as they pulled back from multi-month highs as investors are starting to rotate back into stocks for the time being anyway, while the dollar extends its advance versus most of its rivals.
Well, Jill, finally, President Trump's 100th day in office is right around the corner on April the 29th, and investors are now asking where the Trump bump rally ranks after his 100 days in office. Tell us, what has happened?
Yeah. That's a great question, and I took a look at LPL Financial. They do some fantastic research over there. President Trump's 100th day in office is, like you said, it's going to be on April 29th. This coincides with a potential government shutdown in the U.S., so all this coupled with the French elections this weekend could make the remaining weeks of April quite interesting. Now, the Dow is currently up 2.9% since Trump took office, with a median return of about 2.7%. This would rank near the middle of the pack for all the presidents going back to 1900 for the research that's available to us. Now, most might find that surprising, but of course, you have to remember much of the Trump rally took place prior to his inauguration, and those gains don't count in this case if you isolate the first 100 days. You also have to ask yourself, is the Dow an accurate representation of what's driving today's economy, since we're in such an on-demand tech environment with names like Amazon.com, Facebook, Google, and most of the tech names driving what's indicative of our economy today.
Thanks again, Jill, for those updates. Jill Malandrino is VOA Channels TV business correspondent. Well, in Asia, markets were mostly higher on Friday after a strong session in the U.S. The Japan's benchmark Nikkei 225 index surged 1.03% to close at 18,620.75, and the Kospi closed 0.74% higher at 2,165.04. Australia's ASX 200 made gains of 0.56% to close at 5,804.1, driven by its materials and utility sub-indexes, which were up 1.78% and 2.02% respectively. The mode in China was mixed, with the Hang Seng Index marginally higher by 0.09%. The Shanghai Composite was higher by 0.03% to close at 3,173.15, while the Shenzhen Composite was off 0.44% to close at 1,920.22. Let's take a breather from those numbers now to Zimbabwe, where the tax agency says it has collected $862 million in the first quarter of 2017. This exceeds its target by 6% and is boosted by automated operations and improved compliance among businesses. The Southern African country fell short of its 2016 revenue goal by 4% as its economy suffered from weaker commodity prices and a liquidity crisis. Expects to collect $3.7 billion this year. The tax agency explains that value-added tax on local sales brought in the highest contribution of 22.42% to the revenue. President Robert Mugabe's government, which fell out with Western donors nearly 2 decades ago amid accusations of human rights abuses and electoral fraud, does not receive significant direct international aid and relies almost entirely on tax revenues to fund its budget. In Kenya's KCB Group, that's the country's biggest lender by assets, says it has offered employees voluntary early retirement in a bid to save $19.36 billion. Officials of the bank explained that staff have a month to apply, and the group plans to complete the exercise in the middle of June. That's according to sources at the KCB. KCB believes the cuts would help it align its staff with a banking industry it had been dimmed by legislative and regulatory reforms. The KCB, which also operates in 5 neighboring countries, had already said it will cut an unspecified number of jobs, mainly due to technological changes and the capping of commercial rates in Kenya last September. Business Incorporated returns in a moment. Please stay with us.